Doing very good. Started trading gold recently, and I've seen a lot of people talk about gold and how structure and how the structure is very nice and how it plays out, and how it's very volatile as well. So I decided to try out my strategy on gold. I've been trying it out. I've been backtesting and trying it out for the past, one over a month now, give or take. And I can tell you, I think I'm about to switch to gold. All right. I'm about to be a gold digger as well, like everybody says. So I took a trade yesterday and I was able to make, 1 to 4, reach the reward on that, and it was a win. Same thing happened today in New York session. I took another trade and it was a win. So I'm going to be showing you these trades and what I saw and my setup and how I was able to come up and how I was able to get on this trade. So stick around, like this video, subscribe to this video, and let's get right in. All right, so welcome back. So, like I said, today, this week particularly has been very good. Previous weeks has been good as well, but I was trying to adjust to my new strategy and then, of course, to trading gold because gold was on a all-time high for the past couple of weeks, and of course, it was actually a good trend riding for me because the strategy was even working even more better on a trending market. So why not? So yesterday I took the trade on gold. So what are the things I look out for with this strategy? It's very simple because when the strategy gets too complex for me to it begins to confuse me. Imagine I have to checklist 5, 10 things before I enter a trade. Is either I'm entering the trade wrong timing or I'm missing out some things that I'm not supposed to even enter the trade at all. Where I'm not supposed to enter the trade at all, and many other things like that. So I like to keep things simple and straightforward, no complexities, nothing. 1 to 3 checklist, and then I get in. Right. So here are the things I'm looking out for. I trade purely price action and you know supply and demand, right, with order block as my point of interest. Right. So what am I price action? Basically, I'm looking for a break of structure because I know that one of the fundamentals of anything when it comes to the charts or the forex market is always that markets will keep breaking structures, right? Or changing characters, whichever the case may be. So looking at market breaking structure, I want to see that gives me an idea based on overall trend as well. Give me an idea of where the market is going for that day, right? Is that to say that I will win 100% of the time? Definitely not. You can check out my last video where I talked about the 3 secrets that changed my forex trading psychology and mindset as I approach trading and become profitable. Right. So back to what I was saying, the things I needed to look out for was the first break of structure on the Monday open. Of course, you know that with Monday comes a little bit of gap and slippage. Right. So that happened right here on Monday, break of structure. That was the first leg on the day. Now, the second leg, I saw another break of structure on that day. Now, this is something you need to pay attention to. I only trade during the London and the New York session. Anything outside of that, I don't touch the strategy, I don't touch the market, I don't trade the market. That is my own style. It might work, other styles might work for other people, but that is the style of trading that has been working for me using this particular strategy. So I'm waiting for market to open 8 a.m. Monday, 8 a.m. GMT. That's my Nigerian time. 8 a.m. Monday morning for the markets to open. And so once that is established, market broke structure here, broke structure here, and then this is another break of structure right here. Market broke structure at that level. And then what I needed to pay attention to was wait for market to open. So I marked out my point of interest, which is the last order block that caused the last break of structure. Remember, the last order block that caused the last break of structure. That is when you get in. So this is the last order block, this bullish order block here that caused the last break of structure. And now remember, 8 a.m. that is when I'm getting in, or that is when I would start trading. So market came back into my entry here. This was 6:15 a.m., 6:30 a.m., 6:45 a.m., 6:45 a.m., and then every other. And this was my 8 a.m. candle. You remember, if I had entered the trade earlier or ahead of my London session, the market would have taken me out or taken my stop loss, right? So I needed to wait for the 8 a.m. because I know that that's with London session or New York session comes momentum and volatility. So I needed to ride with them or to ride with the big guys. So what I did was, once it was 8 a.m., I already set my limit as my entry here. My stop loss was 50 pips, take profit was 200 pips. And market opened, the volatility and momentum kicked in, and then it went straight to my TP. I think this was about 1.5 hours, if I'm not mistaken. 15, 15, 30, 1 hour. It's about 1.5 hours, and then straight to my TP. That was how I was able to get my entry for yesterday, Monday, 27th of October. All right. So same thing happened today. And remember, I for my trading style, I only trade once a day based on my risk management and my trading style, really. So um I might see other opportunities during the day, but I'm not going to get into it because I only trade once a day. And if the once a day it's a win or a loss, whichever one it is, I don't care. I'm done for the day. And then I move to the next day, or I wait for another entry the next day. Now, today is Tuesday. That is the 28th of October, if I'm correct. Right. And same thing happened today again. I needed to wait for another break of structure to point me in the direction of where the market is going to be going at this particular day. So first off, I saw a break of structure early hours of the month of this Tuesday, right, to the upside, and instead of it to continue riding up, it came down and broke structure to the downside again, which is to tell me that I need to be very careful to pay attention to where market is going on this trade, right? And then what did I do again? I was waiting for another confirmation, whether bullish or bearish. I needed another break of structure to confirm for me where I'm going to be trading, or the direction I'm going to be trading for this day. So what happened was, after market had traded down all of this point, of course, that this is not there's no break of structure here because market was just going all the way down, right? So I noticed the break of structure at this point. Now this is the mistake a lot of people make, which I've made a lot of these mistakes in the past, is that because market is trading down, you might be seeing points of interest from previous data and be telling it you want to buy, buy, buy. That's how a lot of people blow their account and lose money. Instead, wait for markets to confirm for you the direction it is going, and when it is ready to change direction. So what I needed to do was, this is the first break of structure here, but it was very tiny because the retracement here is very small, right? So I needed the second confirmation to make sure that, okay, this trade is actually going in an uptrend or is moving in upward direction. Like I said, the fundamentals of anything in the forex market is that market will always break structure. That is how it moves. It does not move in a straight line. If you move, retrace, move, correct, move, correct. So if that is established, then that is what I'm trading. All right. So that being said, all I needed to do was to wait for another confirmation, which was another break of structure right here on Tuesday. Market broke that structure, retraced into my point of interest, which was the last order block here. And then guess what? Market pushed immediately the rejection. It pushed. This was less than an hour. The rejection pushed and gave me another 1 to 4 risks to reward. So that was how I was able to make, I think, $200 in 2 days, right? On my prop firm account, good funded trader. Good funded, yeah, trader. I have a prop firm, 5K prop firm with them, and that was able to get 8% on my account. Of course, I think I'm risking 0.5, so let's say 4% on my account. My account has been in a bit of drawdown, so I was able to make it to the upside. So I mean, tomorrow we'll see our entry. If it goes our way, fine. If it doesn't, we go again the next day. That's how to approach trading. No strategy works 100% of the time, remember, right? If your strategy can give you 60% with a 1 to 4 risk to reward, you are profitable already. You just need to test it and prove it with time, right? If your strategy is giving you say 1 to 5 with a no, say you have a strategy that is giving you a 50% win rate with a 1 to 3 risk to reward, you are profitable, right? You just need time to prove it, right? You need time and discipline, right? Most importantly, discipline to prove it, so that you are taking only the trades that you need to take to be profitable. I don't know. I believe this was helpful. If this has been helpful, I want you to take the strategy, back test it. Don't just take it hook, line, and sinker and want to go and adopt it. Back test it, make sure it's working for you, have a system around it, and then trust me, this is going to print you a lot of money. It's going to print you a lot of money. So yeah, that's that for that. If you love this kind of content, if you love this video, give me a like and subscribe, please, so that other people can also get to see videos like this and it can help them on their trading journey. Like, what we do here is to show you the back end of what forex trading really is, the wins and the losses, so you understand that it is not just all about the wins. We also take losses here and then show you the journey to profitability. So if that's been helpful, remember, subscribe and like and share, and I'll see you in the next video.